Today, we shall look at tax practice in Nigeria. First topic we are going to look at today is called tax practice in Nigeria. How do we practice tax in Nigeria? When we talk about tax practice, we are looking at it in the angle of the tax practitioner. We are also looking at it in the angle of who? Tax administrator, the tax authority. So, for the tax practitioner, they are the independent firm licensed to provide tax-related service for their clients. Why the tax administration?
Please, sir, can you please
They are the
hold on?
revenue agency. Okay. This tax practice in Nigeria that we want to look at, we are going to look at it in the two angles. First, in the angle of who? The tax practitioner. And second, in the angle of tax administration. For the tax practitioner, they are the independent firm, independent tax firm that provide tax-related service to their clients. Why tax administration? They are the revenue agency, tax authority, that is mandated or responsible to assess, administer, collect, and account for tax on behalf of who? On behalf of the government. That is for the tax administration. Now, for this tax practitioner, tax practice firm, what is the role of tax practice firm? What are the services provided by this tax practice firm? Number one services provided by this tax practice firm is preparation of tax records. Preparation of what? Tax record. Tax practice firm prepare tax record for their clients. They prepare tax record for their clients. Another one is computation of end of year tax liability. Tax practice firm help their clients to compute liability. Role of tax practice firm. Number one, like I mentioned, is preparation of tax record. Number two, computation of end of year tax liability. They help their client to compute end of year tax liability. Another role of tax practice firm is filing of tax return. Tax practice firm help their client to file tax return. Another role of tax practice firm is tax practice firm advise client on tax matter. They advise clients on tax matters. Tax practice firm also ensure compliance with what? Tax legislation. Tax practice firm, they also ensure compliance with tax legislation. So, management of tax audit and investigation is one of the function, one of the role of tax practice firm. Management of tax audit and investigation. That is the role of tax practice firm. This tax practice firm, this role that we mentioned as the role of tax practice firm, we can divide the role into 4 elements. Those 4 elements is called element of tax practice. The role of tax practice firm can be divided into 4 elements, and those 4 elements is called element of tax practice. What are the elements of tax practice? We have 4 elements of tax practice. Number 1 is tax compliance. Tax practice, one of the elements is tax compliance. What does tax practice firm do under tax compliance? What does tax practice firm under tax compliance? Under tax compliance, what does tax practice firm do? Number 1 is under the tax compliance. Tax practice firm gathered relevant tax information. Tax practice firm gathered relevant tax information. That is one of the jobs that tax practice firm do under tax compliance. Tax practice firm still under tax compliance, they file necessary tax return. They represent client during tax audit and investigation. That is tax compliance. Another element of tax planning, tax practice that we have, that one is called tax planning and advisory, because we have 4 elements of tax practice. Tax planning and advisory. What does advisory contain? They advise clients on how to minimize tax. They advise clients on how to take advantages of tax avoidance. They advise clients on how to claim capital allowance. So, advisory. They also help clients to fight their tax planning. They help clients to fight their tax. Tax planning is also one of the function, one of the role under tax practice firm. Is also one of the role under tax practice firm. Another element of tax practice that we have is called tax litigation. Another element of tax practice that we have is called tax litigation. What do we mean by tax litigation? Tax litigation, what does tax practice firm do under tax litigation? They settle dispute between the tax authority and the taxpayer. They settle dispute between tax authority and taxpayer. They appeal on behalf of the taxpayer when necessary. They also provide, they serve as a witness in the court of law on behalf of the taxpayer. That is under tax litigation. The last element of tax practice that we have is called tax research and intelligence. What does tax practice firm do under tax research and intelligence? Number 1 is under the tax research and intelligence, tax practice firm help to identify tax problem. Tax practice firm help to identify what? Tax problem. That is number 1 thing that they do under tax. They help to identify tax problem. Another thing that they do is, please, let's try to mute our audio. You are distracting all the class. Please mute your audio. Another thing that they do under tax research and intelligence is they help to determine they help the tax authority. That this tax practice firm now, they help the tax authority to identify tax problem under tax research and intelligence. They help tax authority to identify tax problem. They help tax authority to gather relevant tax information under this tax research. They help tax authority to gather relevant tax information. And another thing that they do is they also help tax authority to provide solution to tax problem. So these are the 4 elements of tax practice. Like we said, there are 4 elements of tax practice which we have mentioned. Number 1 element of tax practice that we mentioned is called tax compliance. And number 2, tax planning and advisory. Number 3, tax litigation. While number 4, tax research and intelligence. So we are moving to the next area. Now, the next area is why tax practice firm will make use of technology, IT. Tax practice firm, what are the reasons why they will leverage on technology? Reason why tax practice firm leverage on technology. What are the reasons why tax practice firm will leverage on technology? What will technology, IT, what is it going to help? What value will IT create for tax practice firm? IT is going to create a lot of value to tax practice firm, tax practitioner. It's going to help them to win more clients. Number 1 is winning more clients. It will help tax practice firm to win more clients. It will also help them to retain more clients. Their existing clients, it will help them to retain it. Another benefit of IT to tax practice firm is cross-selling activities. It will help tax practice firm to provide other activities rather than only tax service alone. And another benefit of IT to tax practice firm is it will add greater value to the tax practice firm. It will add greater value to the tax practice firm. And another benefit that technology will create to tax practice firm is time saving. It will save the time of tax practitioner. When you are using laptop, Excel to compute a task, for you to do addition, it's going to save your time rather than using manual, pressing calculator. When you want to use Excel to compute capital allowance, it's going to be accuracy, speed, accuracy. It will give you accuracy result rather than saying, let me press calculator. While pressing calculator, you may make a mistake. So time saving is one of the benefits technology will create. Cost saving. Technology is going to save cost of tax practice firm. It's going to save them cost. Sometimes when we are using manual, we'll be buying some paper, some file. But right now, most of the tasks that we normally compute, we make use of Excel software to compute them. At the end of the day, they are saved on the cloud. They will save our cost of printing. They will save our cost of purchase of A4 paper. You understand? They will also save our storage costs. It will save the cost in the long run. IT save cost. All those documents that you're supposed to be documenting, or you buy a file, or you buy a register. No, everything is computerized. Mobility of service. One of the benefits technology will create to tax practice firm, it will enable them to move anywhere. Even if they're in anywhere, they can carry out their service. Mobility of service. If you're a tax practitioner, if you travel to Kaduna, if you are with your laptop, you can render your tax service there online. You can render the service at any place online. All this is created because of technology. Unlike before that we have the manual system, it is until when you get to office, you'll be gathering all the file. But right now, all the information you need is already on your laptop. Even if you go to London, you can be rendering tax service in Nigeria. Mobility of service. So it's one of the value that is going to create. And tax practice IT technology is going to provide new skills to tax practitioner, to tax professional. It's going to give them new skills, new knowledge. So you may be asked, why tax practitioner or tax practice firm leverage on technology? Number one reason is winning more clients, retaining more clients, cross-selling service, adding greater value to them, time saving. It saved their cost savings too. Mobility of service, increasing the tax audit quality. If they want to do tax audit, it's going to increase the quality. And providing new skills to tax professional. So these are the reasons why tax practice firm leverage on technology. Now, the next area we need to go to is, what are the possible legal and ethical issues arising from tax work? What are the possible legal and ethical issues arising from tax work? If you are into tax practice firm, what are the ethical issues? While rendering your service, what are the legal or ethical issues that may arise while carrying on your tax service to clients? Number one, technical competence issue. Technical what? Competence issue. When the tax practitioner does not have technical competence. Technical competence means updated knowledge, new skills in your profession. When you as a tax practitioner, you are not you don't have technical competence on the new development in tax. Take for instance now, a good tax practitioner should have the the recent knowledge. He should have a knowledge on the recent changes in the withholding tax. As it is right now, we have withholding tax regulation 2024, which started in 2025 year of assessment. We started using another withholding tax rate now, as from 2025. This withholding tax regulation, that's what a good tax practitioner should have knowledge, updated knowledge on the recent changes on withholding tax. As I'm talking to you now, there will be, in the couple of 4 months or 5 months to this time, there will be a lot of changes in tax. There will be a lot of changes in personal income tax. There will be a lot of changes in company income tax. There will be a lot of changes in education tax. There will be a lot of changes in value-added tax. Why? Because of the tax bill, national tax bill, that is in the table of the National Assembly, that the National Assembly, they are still deliberating on. Once National Assembly approve it and President sign it into law, it become a law. That means the rate of company income tax, the table will change. That means the rate of personal income tax is going to change. This national tax bill is going to bring a lot of changes to the tax law. If you are not competent enough as a tax practitioner. If you are not updating your knowledge on the recent changes, it's going to affect your job. It's going to affect your job. It's going to affect the service you render as a tax practitioner. So, technical competence, failure of a tax practitioner to have updated knowledge may affect his tax work. Is one of the ethical issues that we need to consider. Another ethical issue that we need to consider is reasonable inquiry. Reasonable inquiry is one of the ethical issues. When tax practitioner fail to make inquiry, why computing the tax return, why helping the tax payer to compute their tax, you fail to ask information. As a tax practitioner, ask for information, ask for documents that is going to help you while computing your tax. Don't say, they will not give me. Ask, inquiry. But when you fail to ask, it's an ethical issue. It's going to affect your tax work. So reasonable inquiry is one of the ethical issues of tax practice firm. Ethical issue arising from tax work. Another one is continue to act. One of the ethical issues is continue to act. When you are providing your client incorrect information, it will affect your tax work. It's against the ethic of your profession. You may be sanctioned by your professional body. Another ethical issue arising from tax work is when you are helping your clients to carry out tax avoidance. You are the one telling your client to carry out tax avoidance. If care is not taken, by advising your client to engage in tax avoidance, if peradventure your clients now engage in tax evasion, it will affect your profession as a tax practitioner. It will affect your tax work. That means you are encouraging your clients to evade tax. Another ethical issue arising from tax work is supervision of tax audits. Supervision of tax audits. Supervision of tax audits. When they are doing tax audit in your client company, you fail to come as a tax consultant. You fail to come and help your client to defend their tax report with the tax authority. I mean, it's going to affect. Why does client engage you? You are their tax consultant. During the tax audit, you fail to appear. Even when you are there, you fail to defend them. It will affect your ethical issue. It will affect your tax work. Is one of the ethical issues. Another ethical issue is fee setting. Fee setting. When you are charging your client for tax service, the basis that you should use to charge your client, you should not charge your client based on the amount of tax saved or amount of tax liability. Charging client based on the amount of tax saved or amount of tax liability may affect your ethical issue. It may affect your what? Ethical issue. It may affect your professional ethics. It's one of the ethical issues arising from tax work. Misleading advice too. You mislead your clients. You advise them. You give them mislead advice. Providing mislead advice will affect your tax work. It's one of the ethical issues that will affect your tax work. Personal gain. Personal gain too. When you have a personal interest in the client company, maybe you want the client to borrow you money, you have not finished your house while you are doing the task for your client. You now see that this is your client, they make a profit of 500 million. This company is doing well. How much they are paying me as a tax consultant in a year? They are paying me 3 million. Because of the familiarity you have with the managing director, you now go and approach the managing director. Managing director, please, can you help me? That one, as a professional tax consultant, it will affect your ethics. It will affect your ethics, your professional ethics. It's an ethical issue. Don't go and be asking for personal gain with clients. Don't take client property. Don't ask clients to give you financial gain. Be contented with the fee you charge your clients. Another ethical issue arising from tax work is conflict of interest. You are the one that help your clients to prepare their tax report. You are the one that advise them on the amount of tax that they should pay. In the long run, you now go and partner with State Board of Internal Revenue Service. They now appoint you as TAMA. They appoint you as their tax consultant. They now ask you, they now give you a list of companies that you want to go and do tax audit on behalf of tax authority, on behalf of LRS. Out of the list, one of your clients that you are providing tax service for is among them. What do you do? Are you going to defend your job? Are you going to counter your job? This is one of the ethical issues. Conflict of interest is one of the ethical issues. So we have a lot of ethical issues arising from tax work. Number one of them is technical competence, reasonable inquiry, continue to act, tax avoidance, supervision for tax audit, tax loopholes, fee setting, aggressive interpretation. You mislead the client, you misinterpret the tax law to benefit the client, misleading advice. Personal gain too. It's a conflict, it's an ethical issue arising from tax work. Conflict of interest. It's an ethical issue too. Communication. You fail to communicate to your client at the right time. It's an ethical issue arising from tax work. So these are the ethical issues arising from tax work. Now, what is the significance of legal and ethical issue in preparation of tax return? If you fail to follow the legal and ethical issue while rendering tax return as a tax consultant, what is the implication of not following the legal and ethical issue during the tax while rendering tax return to your client? What is the implication of not following tax return to your client? If you fail to follow the legal and ethical issue, or you engage in some behavior that is against your professional ethics during the tax work you are providing for your client, what is the implication? What is the penalties if you engage in some activities that is against your profession as a tax consultant? What is the implication? What is the penalties? Number one is one of the significant of legal and ethical issue. One of the significant is imposition of fine. Your professional body, as a tax consultant, you can belong to a professional body. Either you belong to ICAN, or you belong to CITN, or you belong to ANAN, or you belong to ACCA. If you belong to any of the professional body, every professional body have their own professional ethics that they expect their member to follow while carrying out their duties. So if their member fail to follow those professional ethics, there are consequences. These are the significance that we want to mention. One of them is imposition of fine. Your professional body can fine you. They will ask you to pay a fine. Another one, it depends on the gravity of the unethical issue that you perform. Another one, suspension from membership of the institute for a period of time. You may be suspended. You may be suspended for maybe like 4 years, 3 years. It depends. Another one, expulsion from the membership of institute. When they hear that, this one of the chartered accountant was caught in a rape while going to client office. He wanted to rape one of the client staff. That offense is gravity. What will the ICAN body do? What will the professional body do? They may suspend that member if found guilty. Guilty, or they caught one of the professional accountant, member of the ICAN. They caught him while stealing money. I'm not talking of embezzlement. I'm talking of stealing. That person may be expelled. Expulsion from the membership of the institute. Another one is withdrawal of certificate. They may withdraw the certificate. When they expel somebody, they will withdraw the certificate or license to practice. Every tax practitioner cannot just start a tax practice firm. They will be given a license to practice tax. And every year, you will be regulated on how you should carry out your service. Another one, that member, that tax practitioner may be reprimanded. He may be reprimanded. It's one of the consequences or significant of legal and ethical issue in preparation of tax service. That person may be reprimanded. Is one of the ethical issues. Is one of the significant effects for you engaging on ethical issue. One of the consequences too is payment of associated costs with the investigation. If you are investigated whether you engage in ethical issue, you may be asked to pay the associated costs incurred during your investigation. That is the consequence. So now, the next area we need to go is what are the risks of running a tax practice firm? What are the risks of running a tax practice firm? If you are running a tax practice firm, what are the risks that you may encounter while running a tax practice firm? What are the risks that you are going to encounter? One of the risks of running a tax practice firm is lack of expertise. When you don't have adequate knowledge or professional knowledge, experience on how to carry out tax service, if you run a tax practice firm, you are running it at your own risk because you will be misleading the client. You cannot advise the client very well. So if you have one client and that client cannot recommend you to another client, that means you don't know what you are doing. One of the risks is lack of attention to detail. When you fail to take attention to one of the duty. What are the duties? You need to know while rendering tax service to your client. You need to know the timeline for filing return. Don't go and file return after the due date. After the due date. Don't wait to file return after the due date. You should avoid penalties. You should avoid payment of penalty by the client. Lack of documentation is another risk. When you fail to document your client's record as a tax practitioner, one of the risks in your job is when you fail to keep record of your client's tax work. You fail to maintain a working paper for the tax work you render for your client. Is another risk arising from tax work, arising from tax practice. It's another risk arising from professional tax practice. Another risk is unpredictable income of the owner. Sometimes when you are in tax practice, sometimes you may not have clients. Your client may not be much. For you to get one client, you will work. And in that period of time, as a tax practitioner, maybe you have like 3 staff or 4 staff, you will be paying your staff with your personal money. But you are hoping that in the future, things is going to change. So these are the risks of tax practice firm. These are the risks of tax practice firm. Now, what are the measures to mitigate the risk faced by the professional tax practice? What are the measures to mitigate the risk faced by professional tax practice? One of the measures that can be used to mitigate the risk faced by the professional tax practice, as a tax practitioner, you know your knowledge. Tax is very broad, though. Tax is very broad. There's an area in tax, it's called transfer pricing regulation. Transfer pricing regulation. It is this transfer pricing regulation. If you don't have knowledge on international tax enough, if you don't have enough knowledge on international tax, you cannot do transfer pricing regulation. It's not every tax consultant that know about transfer pricing. It's an international tax issue that you are going to read practical experience. If need be, you will travel to other countries. So this transfer pricing regulation in tax is one of the areas that it is not meant for anyhow tax practitioner. You cannot just jump into it because it's an area that you use to advise multinational companies, most of the companies that have subsidiaries. So as a tax practitioner, you know that you don't know anything on transfer pricing. One client now come and give you transfer pricing work. Don't take it. Take the work within your cycle of competence. You did work that you know. You know how to file personal income tax return. You know how to do tax audit. You know how to file company income tax. Take that one. Don't go and take the one that you will disgrace yourself. Or that as a tax practitioner, the client may sue you. Because transfer pricing, if you give wrong advice in transfer pricing and you mislead the client can sue you. Because penalty on transfer pricing is very high. Some company can pay penalty of 200 million on violation of transfer pricing policy. If you now go and advise your client, the advice you gave them now result in paying penalty of like 200 million, this and they may sue you. That means you don't know your job. So as a tax practitioner, one of the way to mitigate the risk you'll be facing while carrying out your tax services, take the job that is based on the circle of your competence, the job that you have technical know-how, the technical knowledge of how to do. Another one is implement quality control. Implement what? Quality control. How can we implement quality control system in the tax practice firm? Let's say, for instance, the name of my own tax practice firm is BDI Tax Consulting. If I did a tax job, I can send it to another tax practice firm to help me review, peer review. Some of the mistakes in that job, I may not see it. It is outside person that will see it. Quality control. Before you send any report to clients, take it to the upper management. Let the partner review it. Let other person review it before sending that final report to clients. Use of checklist. For you to minimize risk in your tax practice firm, there is tax audit checklist, tax planning checklist. Have a tax planning checklist. Work towards that tax planning checklist. If you are working towards that tax planning checklist, you will not have a problem while rendering tax service to your client. It will minimize the risk that you may encounter. It will mitigate the risk that you may encounter as a professional tax practitioner. Another one is you invest in education. You educate yourself. You go to workshop, training, gather new knowledge in tax, train your staff. Don't say you know everything. Go to workshop, go to MCP, gather new knowledge. Look at how others do their own. So all this will mitigate the risk faced by professional tax practitioners. So this topic is called tax practice in Nigeria. And I said this tax practice in Nigeria, we are going to look at it in two angles. First, in the angle of tax practitioner. Second, in the angle of who? Tax administrator. Now, we want to look at tax administrator. Who is a tax administrator? Those who assess, collect tax, administer tax on behalf of government. They are the tax administrator. Federal Inland Revenue Service, State Internal Revenue Service. They are the tax administrator. What is the role of tax administrator? Role of tax administrator. Let's look at the role of tax administrator. Number one role tax administrator play is registration and education of the taxpayer. Tax administrator registered taxpayer. They issue thing to the taxpayer. Apart from issuing thing to taxpayer, they also educate the taxpayer. They educate them. They will be the one to tell the taxpayer, okay, the VAT rate has changed from 5% to 7%. Okay, this is the new way for computing tax. So you understand? This is the so they educate the taxpayer. Another one is they help taxpayer to file their tax return. They help taxpayer to file. They receive the tax return filed by taxpayer, tax authority, tax administrator. They will receive the tax return filed by taxpayer and they will check it whether that return is right or wrong. Receiving the return filed by taxpayer. So they will receive the return filed by taxpayer. Another role of tax administration is assessing taxpayer. There will be the one to raise assessment on the taxpayer. There will be the one to raise assessment on taxpayer. Another role of tax administrator is managing and processing of tax refund application. Managing and processing of what? Tax return application. Another role of tax administrator is conducting routine tax audit and investigation. Conducting routine tax audit and investigation. Please, try to mute your audio. Molam, please try to mute your audio. Alagi, mute your audio. Another role of tax administrator is managing and enforcing tax debt recovery. Managing and enforcing tax debt recovery. Managing and enforcing.
Mr. Hosseini, please mute your mic now. You are disturbing us.
Sir, you can mute him from your end.
It's very juicy. You can mute it from your end. Can mute it from your end.
How can I mute him? I've been trying to do so.
There's a button for mute all participants. You can just go to participants, sir. Then click on his name, mute.
Okay. So let's continue.
Okay,
Okay. Conducting another role of tax administration. Tax administrator. Another role of tax administration is advising on the review of tax legislation and regulation. Advising on the review of tax legislation and regulation. Advising on the review of tax legislation and regulation. These are the role played by who? Tax administrator. Now, the next area we need to look at is what are the technology that can be used in the tax industry? What are the technology that can be used in the tax industry? We call them disruptive technology.
Yeah. Chicken,
I'm not the host. I cannot mute. I'm not the host. It is only the oath that can move. Okay.
Mr. Idris, I
Yes.
believe that the young man have forgot that he's on meeting. So somebody should call him on his phone, give him a direct call, so that he will just mute by himself. He forgot that he's on meeting, have joined another meeting. So give him a direct call.
Okay, let me do
WhatsApp
so.
call.
Now life.
Today is what?
So now it's just this talk that. Since yesterday, now they talk of this.
They don't carry.
Friends, they say he talk with friends. That's what they do. But what did the man do now? Where people they
Mr.
let him go?
Zan, you are disturbing us.
What did he do?
Even Satan himself.
What did he do?
Even Satan himself will remove car for him.
No, I don't up to now. I want people to tell me what 2 or 3 something where you don't do where they pray for his
When
death.
you become governor, people leave the state.
Nobody leave the city. Fight at all.
Nobody fought him.
They fought it out.
Nobody fought him.
Okay, you are not in politics.
Okay.
We they follow them. We know what we they see.
Even in PDP, we dey tell
Somebody
them,
should call
don't
Mr. Hassan on phone. Anybody that have his WhatsApp number should call him on phone. Yeah. What is the meaning of all these ones?
the only best way to fight is normal opposition. When he become governor, nobody fought him. They are waiting for the next election. Somebody enter
To call him now, I've sent message to him. So now, some of the new technology disrupting tax industry. What are those technology that we use, that we can use, IT that we can use, that will help us in the tax industry? This technology can be used either by the tax authority or the tax practitioner. What are those technology? Number one of them is cloud computing technology. Cloud what? Computing technology. What do we use cloud computing technology for in relation to tax? Cloud computing technology, we use it to save tax information on the cloud. Take, for instance, now, tax authority. Look at the number of taxpayers that tax authority normally manage. Every year, look at the number of tax return that they will be filing. Before the introduction of tax promas used by FRS, if you want to file tax return, you file it manual, you submit document, you file it. At a time, FRS will have a warehouse where they are loading all the tax return filed by taxpayer. They will have a lot of documents, paper. But right now, we are using technology. We are paperless. We are not using anything on paper again. If we want to file tax return, we file it online. Once we file it through our tax promise, all the information about that tax return is going to be saved in the cloud. Cloud help tax authority very well to save information. Look at it, if they want to be collecting printout paper, how many years? How many? Look at the number of warehouse, number of where they will be storing the documents. But right now, all the document relating to taxpayer is being saved on what? On the cloud. So cloud computing technology helps a lot. So in this cloud computing technology, there will be automated tax computation. There will also be tax return preparation, like tax promas. It helps us to compute our tax automated. It helps us to file our tax electronically. It helps us to make payment of tax electronically. So cloud computing, the whole essence is it is used to save tax information. It helps, cloud computing will help tax authority to reduce their costs. Look at the cost they will be spending if they want to be saved, if they want to be storing all those returns filed by the client using paper. So cloud computing app is one of the technology that help us in the tax industry. Another technology that can help us in the tax industry is called artificial intelligence. Artificial intelligence and what? Robotic. This artificial intelligence and robotic, it helps us a lot in tax industry. This one too, it helps the tax authority. If taxpayer or tax consultant, tax practitioner want to ask information from the tax authority, there are some information that is in the website of the tax authority. There are some information that is in the website of the tax authority that those questions, those information, they have designed it in form of frequent question. When you ask in the website of tax authority, maybe FRS website, you log into their website. If you want to make inquiry, you will just see a message. What do you want? What do you want us to assist you? When you send your question, it will respond back to you. If it is simple question, that artificial intelligence will answer the question. Maybe what is the due date of filing VAT return? It will answer the question. But if the question is something that it cannot answer, that has not been computerized, because those questions that it answer you, they computerize it that, in case anybody may ask this question, this is what you answer. If those questions that you ask is not computerized, it will not ask you, please, this question, you need to proceed further. You can call this number. But artificial intelligence helps tax authority a lot. Look at the number of calls tax authority will be receiving a day. Look at the number of inquiry tax authority will be attending to a day. In order to save their cost, to save their time, there are some simple questions that if somebody want to ask, that question can be answered by who? The robotic. Frequent answer question designed in their website. So that is artificial intelligence. Another technology that can be used in the tax industry is called blockchain technology. Blockchain technology. Blockchain technology is all these group chats, when you can pass information in a group. All this blockchain technology, if tax authority want to disseminate information, they want to pass information to large number of groups through this group chat, they can use blockchain technology. We have another one, data analytics technology. Another technology that can help us in the tax industry is data analytics. What are the data analysis? They are the Microsoft Excel, spreadsheet. This helps the tax consultant, it helps the taxpayer, it helps the tax authority to compute the tax, to get accuracy of record, to analyze data, to analyze tax information. Excel has helped a lot. It's a technology. Excel is a technology on its own. Microsoft Excel. It has helped tax authority a lot to analyze data, to compute tasks, to ensure accuracy of records. So, data analytics, example of it is Microsoft Excel, is one of the technology used in the tax industry. Another technology that can be used in the tax industry is called social media technology. What are the social media technology? Facebook, LinkedIn, Twitter, Instagram. FRS have a Facebook. LRS has a Facebook. In their Facebook, they will have so many friends. They can have like 50,000 friends. They can have so many friends. The whole essence of this is to ensure that if they want to pass out information, by the time they post that information in their page, in their Facebook page, many of their friends, many of those who are friends to the tax authority is going to read the information. At the end of the day, they will be disseminating the information to another group. So social media technology help tax authority to pass information, to disseminate information to a wide range of people. If there is a new changes in tax now, or tax authority, VAT has been increased. If FRS put it in their Twitter, as from so days, we'll be collecting the new rate of VAT. Before you know, the information will be spreading. Everybody that are follower of FRS in their Twitter will be helping them. So many of them, they are going to be helping FRS to repost it. Why they are reposting it? They are disseminating the information. The information is getting to a lot of people to the extent. So one of the way, if FRS want to pass information around, or if FRS want to remind people about deadline for filing tax return, they can post the information to their social media handle. Another technology used in the tax industry is called mobile app technology. What are the mobile app technology? FRS have their own mobile app technology. The mobile app technology of FRS is called Tax Pro Mass. LRS too, Lagos State Internal Revenue, has its own mobile app technology. The mobile app technology of LRS is called e-tax. This mobile app technology assists the tax authority and tax payer to file tax return, to compute tax, to generate receipts, to attend to tax issues. So these are the technology that can be used in the tax industry. You may be asked, what are the technology that will help tax industry? What are the technology that will assist tax industry? Cloud computing technology, number one. Artificial intelligence and robotic, number two. Number three, blockchain technology. Number four, data analytic technology, which is Microsoft Excel spreadsheet. Number five, social media technology, Facebook, LinkedIn, Twitter, Instagram. Mobile app technology. This one, it helps the client to file their tax return. It helps the client to make payment of tax. It helps the client to generate receipts. Now, what are the impact of this new technology to the tax practice and administration? What benefits will technology bring to the tax practice and administration? What impact will this technology, all this technology we mentioned, what impact is it going to create to tax practice and administration? Number one, customer satisfaction. With this technology, FRS will certify their customer, the taxpayer they are going to certify them very well with this technology. Another one, low cost of what? Compliance. Low cost of compliance. It will help the tax authority to reduce their cost of tax compliance. It will help the taxpayers too to reduce their cost. Another one is data error minimization. It will help to reduce data error. It will help to do what? Reduce data error. While the last one is improve voluntary compliance. IT, this new technology will improve voluntary compliance. It's going to improve the voluntary compliance. It will make taxpayer to comply to the tax law voluntarily. So challenges now. Another heading now is challenges of tax practice and administration in Nigeria. Challenges of technology. What challenges with technology what challenges that we are going to face as a tax practitioner or tax administration from adoption of technology? What challenges are we going to face? Number one, low computer literacy level. Some of the tax practitioner or tax authority, they don't know how to use computer very well. Some of them are very good in manual. They have to start training them. Some people don't know how to use Excel very well. Some people don't know how to use social media handle like Facebook, Twitter, LinkedIn. Another one, poor internet connectivity. All this technology I mentioned earlier, if you want to make use of some of them, you will need internet. You will need internet subscription. And sometimes we know we are in Nigeria. There may be internet connectivity, internet facility may be bad. Internet may not connect. The network you are using may not connect. So it's one of the challenges of technology to tax practice and administration in Nigeria. Possible cyber threats are all this technology we are talking about. If care is not taken, there may be cyber threats, hacker. They may hack the tax promise to get information about the taxpayer. Another one, high implementation cost. The cost of implementation of IT, especially like tax promise designed by FRA, is not a small money. They will be maintaining it, implementing it, updating it. That cost is very expensive. Another one is lack of technical know-how. Sometimes all this technology that is used by tax authority or taxpayer don't know how to use them technology, don't know the technical know-how of it, the background of it. Why the last one is challenge of data validation. How do we know that the data inputted in the tax promise is correct? How do we know that the revenue that we put in the tax promise is the real revenue of the company? IT technology is garbage in, garbage out. What you put into the technology is what you are going to print out. There is nowhere to check that the data inputted by the taxpayer on this technology is the correct data or incorrect data. Garbage in, garbage out. So it's one of the challenges that technology can create to the tax practitioner and tax administration. So the last one we need to look at is IT tools for effective tax audit and reporting. If you want to do tax audit, what are the likely IT tools you can use that will help you for your reporting tax audit? If tax authority want to do tax audit, what are the IT tools that can help them to do their tax audit effectively? Number one, email message application. Tax auditor, they will make use of email. They will send email to taxpayer to tell them when they will come for the tax audit. So email message application is one of the tools, IT tools, tax auditor can use that will facilitate tax audit. Video conferencing. After finishing the tax audit, if they want to do reconciliation because of COVID, tax authority may not say, I'm going to tax payer office. Taxpayer office may not say, I'm going to tax authority office. They may arrange to do the meeting on what? Video conferencing, like Zoom, like how we are doing now. This lecture we are doing now. Tax authority and taxpayer, if they want to reconcile on tax audit, they may arrange for Zoom. The tax consultant too will be, so everybody will stay their own situation. They will arrange for Zoom meeting. Again, tax auditor, if they want to do training for their staff, for the staff of tax audit, they may arrange for Zoom meeting. So video conferencing is very important. It's one of the IT technology that tax auditors can use. Google Meet, Microsoft Teams, Zoom, they are example of video conferencing. Another technology tax auditor can use, data analytics. We have mentioned that earlier. Data analytics. All this Excel, Microsoft Excel, spreadsheet. It helps tax auditor to analyze, to determine the liability, to analyze the financial statement very well. Microsoft Excel is one of the good technology used by accountants. And the last one is tax management software. What are the tax management software? They are the tax promas. They are the tax management software. So these are the technology. So for the sake of time, let's quickly look at these tax promas we are talking about. Tax promas. Let's look at the tax promas. Let me open the material for the tax promas. So let's look at the tax promas. Ladies and gentlemen, my laptop, the battery is low already. So the tax promas, we are going to look at it while we are doing a topic called taxation of digital economy. We are going to look at the tax promas while we are doing taxation of digital economy. So for today again, another area we want to look at. So the tax promas, we will not do that today again because my laptop, the battery is low already. My laptop is off. So I'm using my phone now. The last topic we are going to look at today, that one will take us like 30 minutes or 20 minutes. That topic is called base erosion profit shifting. Based erosion profit shifting. Base erosion profit shifting is one of the international tax. Base erosion profit shifting is one of the what? International tax policy. You know our syllabus, 30% of our mark is coming from international tax. 30% of our mark even 35% sometimes. It's coming from where? International tax. What are the international tax topics we need to do? Number one, international tax topic we need to do: double taxation relief. Number two, taxation of non-residents. It's a number two international tax that we need to. Why number three international tax we need to do? Transfer pricing. Transfer pricing is an international tax that we need to do. Another international tax we need to do is called base erosion profit shifting. That is number four. Why number five? Tax haven. That is number five. Tax haven. Number six is African Continental Trade Agreement. As I mentioned, only two of them are working. Taxation non-resident company, but all of they are theory. But like I said, there is no how we are going for exam for advanced tax without knowing international tax. 35% of our mark of our question, it will be based on international tax. Last diet, double taxation relief was out. African Continental Trade Agreement too is an international tax. It was out last diet. Yes, I can hear you. I'm coming. I want to share the
What was the
material.
last one after the tax haven? You mentioned one other one, but your line was breaking then.
African Continental Trade Agreement.
Okay. I also noticed that you don't respond to your chat box, sir. Sometimes you drop questions for you there.
Oh, you normally drop. Sometimes I don't look at the chat while lecturing. Sometimes I don't look at the chat while lecturing. So there is a material I sent to the group chat now. Can we see the material? Base erosion profit shifting. I'm trying to share it through my phone. So I'm looking at a way I can share the material on the screen through my phone. Please, if you have seen the material, you can help me share it. You can help me share the material to the screen. I don't know what's... Hello? Anybody that have received the material, you can help me share it to the screen.
So which group did you send it to?
I sent to Advanced Tax Online.
Oh, okay.
Let's
No,
send
all
it
of
to
us
the
know
other
that.
group. Let me send it to other groups so that anybody can help me share it to the group. You can help me share it on the screen so that we can start the topic. Just within 20 minutes, we are done with the topic. Let me share it to other group. So you can help me share it. Let me share the material. Base erosion profit shifting. That is the topic. Base erosion profit shifting. I'm trying to share the material. It's not from my own end here. Base erosion profit shifting. That is the material. Anybody can help us share the material to the group chat. Okay, thank you very much. Base erosion profit shifting. What do we mean by base erosion profit shifting? This word, base erosion profit shifting, means the process is one of the international tax policy, and base erosion profit shifting is used by multinational companies. They use this base erosion profit shifting to shift profit from high tax jurisdiction to low tax jurisdiction. This base erosion profit shifting is a technique that multinational companies use to reduce their tax. They use it to reduce their tax in a sense that they will shift the profit from high tax jurisdiction to where? To low tax jurisdiction. United States of America is an high tax jurisdiction. UK is an high tax jurisdiction. Nigeria is an high tax jurisdiction. If a multinational company, maybe they have subsidiary in Nigeria, they have subsidiary in UK, they have subsidiary in, they don't want to pay tax in those countries. What they will do, they will use a strategy to shift the profit made in those countries to low tax jurisdiction. Like Saudi Arabia is a low tax jurisdiction. United Arab Emirates, Dubai, all these Middle East countries, they are low tax jurisdiction. So most of the multinational companies now, please let me share the material. Most of the multinational companies now, they are now shifting their profits from the high tax jurisdiction to the low tax jurisdiction in order to reduce debt. That is what base erosion profit shifting means. That is what base shifting means. This base erosion profit shifting is going to benefit company because, take for instance, Chevron Nigeria make a profit of 200 billion and they're supposed to pay 30% tax on that profit. The Chevron International, the head office of Chevron, which is in another country, may decide that they don't want to pay tax, they don't want to pay too much of tax in Nigeria. They will now adopt base erosion profit shifting. They will now adopt base erosion profit shifting to shift the profit from Nigeria to another country where they will pay low tax or where there is no tax at all. Those tax-haven countries, they don't pay tax or they pay little tax. So multinational companies now, they are making use of base erosion profit shifting strategy to shift their profits to the tax-haven countries. The tax-haven country means those countries that charge lower rate of tax or they don't collect tax. This tax-haven country, in the contents of international tax, they are giving all other countries a lot of headache. Why do you say as a country you don't want to be collecting tax or you are collecting a low tax? Most of the multinational companies now, they are now moving their investments to this tax-haven country. One of the techniques that they used to move the investment is called base erosion profit shifting. Now, what are the benefits of this base erosion profit shifting to the company that is doing it? Number one, reduction of both corporate taxes and withholding tax in the source country. It will reduce the corporate taxes and withholding tax company want to pay in the source country. It will reduce it. Base erosion profit shifting will reduce it. Reduction of tax on any intermediary entity that receive amount from the entity in the source country. Base erosion profit shifting will reduce that. Another one is reduction of tax on ultimate parents. Base erosion profit shifting will reduce tax of the ultimate parents. Now, what are the techniques that are used to practice base erosion profit shifting? What are the techniques that are used to practice base erosion profit shifting. What techniques company use to practice base erosion profit shifting? Number one techniques company use to practice base erosion profit shifting is called trademark or technology license. Trademark or technology license. Are you still with me? Trademark or technology license. The person that asked to share the material is another thing you are sharing now. You are not sharing the material now. Trademark or technology license. Trademark or technology license. This trademark or technology license, multinational company, they will every year they will say that their subsidiary need to be paying them trademark, the trademark for using the business name. Why they are charging this trademark? The purpose of charging this trademark is for this multinational company to avoid, to reduce the tax the subsidiary will pay. That is the purpose of charging this trademark license. Every year in the expenses of the subsidiary, you will see an amount called trademark or technology license. That mark technology license is paid to who? Is paid to the parent company. Indirectly, it will reduce the profit of the parent company. Indirectly, it will reduce the profit of the parent company. So, trademark and technology license is one of the techniques multinational use to reduce their tax. Another technology used to reduce their tax is called tin capitalization. Tin what? Capitalization. Tin capitalization is one of the technology that companies use to practice base erosion profit shifting. Tin capitalization. The parent company, if they don't want the subsidiary company to pay tax in their country, they will now borrow the subsidiary money. They will borrow them a loan. If they borrow them a loan, that loan that they borrow the subsidiary is not using the loan for any sake. But every year, the subsidiary is going to be paying the parent company interest on the loan. You understand? That interest on the loan that they are paying, it will be reducing the profit of the subsidiary, and it will be adding to the income of the parent. And you know that the parent company is in a country that don't pay tax, or they pay lower rate of tax. So indirectly, they are shifting the profit from the subsidiary country to the parent country through the use of interest. The loan that parent company borrow the subsidiary don't need the loan, but they just deliberately borrow them, and they will agree at an interest rate. For some number of years, they will now be charging interest rates in the account of the subsidiary, paying to the parent. So that interest rate will reduce the profit of the subsidiary. It will add more to the income of the parent. That is thin capitalization. Thin capitalization simply means excessive interest. When an interrelated company give out loan among themselves, they now charge excessive interest rates. That is meaning of thin capitalization. When the debt in an organization, thin capitalization also means a situation where a company is highly geared. What do we mean by highly geared? When your debt proportion is more than your equity proportion, that means you are highly geared. When you are highly geared, the interest you are going to pay is not going to be more than the dividend. So, thin capitalization is one of the technology used by a company to practice base erosion profit shifting. Another technology used by a company to practice base erosion profit shifting is hybrid mismatch arrangement. Hybrid mismatch arrangement. This one is talking about the effect of double taxation. They will know that this country, they have double taxation agreement together. They will now take advantage of double taxation agreement to reduce the tax of the subsidiary. They will take advantage of the double taxation agreement to reduce the tax of the subsidiary. Another technology used by company to practice base erosion profit shifting is called putting assets into entity without substance. Putting assets into entity without what? Substance. There are some assets. Take, for instance, the assets that subsidiary is using in Nigeria. That asset, subsidiary will not buy it. They will say they lease the assets from the parent. Every year, subsidiary is going to be paying the parent lease rental on those assets. And that lease rental will be reducing the profit of the subsidiary. That is meaning of. And the subsidiary, the parent company is not in Nigeria, but they will tell us that it is owned by the parent company and they are paying them lease rental. The asset does not belong to them. Some multinational company, if you look at all the assets, they are not the owner. They will say the asset is owned by their parent company, and every year they are paying their parent company lease rental. That lease rental, they will use it to reduce their profit. Now, we have looked at those technologies used to practice base erosion profit shifting. What are the action plans that tax authority use to guide against base erosion profit shifting? What are the action plans tax authority use to guide against base erosion profit shifting? OECD, Organization for Economic Cooperation and Development. In tax, we call them international tax administrator. They are the ones that regulate anything that have to do with international tax. OECD. They are one of the bodies that regulate anything that have to do with what? International tax. For the number of years, when they discover that some company, they are using base erosion profit shifting to move profit from one location to another, they now make some recommendation on how a country can guide against base erosion profit shifting. OECD make a recommendation on how a country can guide against what? Base erosion profit shifting. What are the recommendations made by OECD? Number one recommendation made by OECD is restriction of interest deduction. OECD recommend that if subsidiary and parent company if parent give a loan to subsidiary, the interest on the loan given to the subsidiary should not be more than the 30% of any before interest and tax. The interest on the loan given by the parent to the subsidiary will be restricted. How do we restrict it? We are going to restrict it to 30% of any profit before interest and tax. Profit before interest and tax and depreciations too. We will restrict the interest to 30% profit before interest and what? Tax. Another action plan that OECD recommend to guide against base erosion profit shifting is counter harmful tax practice. Counter harmful what? Tax practice. The tax authority in the country that they want to move the profit, them too, they should engage in counter harmful tax practice. They should implement a policy that will not encourage transfer pricing, or they should regulate transfer pricing. I'm still talking, I'm still coming to the area of transfer pricing. Counter harmful tax practice, they should engage in a guide that will ensure that there is no leakages in the tax law. Another action that can guide against base erosion profit shifting, another action that can guide against base erosion profit shifting is address tax challenges of digital economy. You should address tax challenges of digital economy. You should ensure that if subsidiary transfer money to parent company, or if parent company said he render service to subsidiary and they want to charge this for service, immediately the parent company is receiving the money, we should charge the parent company digitally. Since subsidiary is not paying tax, parent company, you have made a profit in our country now. You have made a revenue in our country. Before you collect that gain, before you collect that profit in your own country, you have to pay tax. So that means taxation of digital economy, online tax. Even though you are not in Nigeria, but you are making profit in Nigeria, we will tax you digitally. So introduction of taxation of digital economy is going to reduce base erosion profit shifting. Another one is transfer pricing regulation and documentation. You need to ask your taxpayer to document their transfer pricing. If they transfer goods between parent and subsidiary, let us know. If that transaction is not done at arm's length, we will not recommend that transfer pricing. If the transaction is not done at arm's length, we will not recommend the transfer pricing. Another action plan against base erosion profit shifting is called country by country reporting. OECD recommend that any multinational company, every year they should be given a report. That report is called country by country reporting. All the countries that they have subsidiary, they should show the turnover, revenue, they should show the cost, they should show the profit. And in the course of doing that, we can see any interrelated costs among them. So these are the action plan against base erosion profit shifting. These are the action plan against base erosion profit shifting. So this is what we have for today. Any other question, any query? Any other question, any query? Do we have any question, any query? So one of the international tasks, we have done that. It is called base erosion profit shifting. The one we have left, double taxation relief, taxation of non-resident, tax haven. transfer pricing, African Continental Trade Agreement, and economic integration is. So for the rest of our diet, we will be focusing more on international tax. We are going to be focusing more on what? International tax, because they are important area. 30% of our question or 35% of our question will be based on international tax. So we need to pay more attention to international tax. So our next lecture on international tax will be basically based on transfer pricing regulation. That transfer pricing regulation is a theory too. We are going to look at that. That will be our next question. Any question, any issue, any query? Do we have any question, any issue, any query? So in the absence of no question, we can call it a day. So let me remind you, Mr. Chris is coming. Mr. Chris' lecture will start by maybe 2 o'clock or 1:30, I don't know. So he's going to take us hydrocarbon tax. Like I said too, let's pay more attention to that hydrocarbon tax. Every diet question and hydrocarbon tax normally come out. And somebody like Mr. Chris is working in oil and gas. He has a lot of experience in hydrocarbon tax. It's one of his area. So I will encourage us to attend the class. So thank you for having me. Have a nice day.